Hello and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. In the glow of Dhanteras lights, let's reflect on the historic journey of Indian markets in Samvat 2079. Nifty touched 20,000 on September 11, 2023 and Sensex surpassed 67,900 with both the indices gaining around 6% during Samvat 2079. However, the real outperformance, as you'd all know, came in from Nifty Mid Cap and the Small Cap Index, which gained around 24% and 31% respectively. The upmove in the market was exceptional considering the Russia-Ukraine war, Israel-Hamas war, and of course, high global inflation, rising crude price, and peak US 10-year yield and consumption slowdown. But how do we navigate Samvat 2080? What are some actionable ideas for Samvat 2080? This Diwali, we bring more than 10 actionable ideas to kickstart your Samvat 2080, curated by our panel of 3 experts. Deven Choksey, who is the Managing Director of DRChoksey FinServ, Siddarth Bhamre, who is the EVP Research Head at Religare Broking, and Shrikant Chouhan, who heads the Equity Research for Kotak Securities. We also have a roundup of sorts later part of the show from Rahul Arora, but let's get started with Deven Choksey first. Mr. Choksey, greetings and happy Dhanteras to you. Your top 3 Diwali picks for our viewers this time around.
So, Nickey, happy Dhanteras to you as well, and wish you all a very, very happy and prosperous Diwali. And blessings from God. I invoke blessings from God for the prosperous Samvat year 2080. Well, I think whether Diwali to Diwali, I'm not so good at, but I feel that I think some of the businesses which are appearing really promising at this point of time, I would probably like to share with your viewers. Geo Financial Services is one company which I think has taken birth in the listed market. And we believe that I think this particular company has a distinct advantage as they enter into the marketplace. With 4 verticals, which is your NBFC or the banking financial vertical. The second vertical is the insurance vertical, which is likely to get announced. The third vertical is the AMC vertical, where they have done the tie-up with BlackRock for launch of funds. And the fourth vertical is a wealth vertical, where they are basically distributing all the products, financial products, investment products. The distinct advantage is one, they have the balance sheet size, which is close to around 1,40,000 crores net worth, which is third only to largest banks like SBI, HDFC, and now the Geo Financial. So that gives them a power to launch the business in a systematic manner. The other advantage that they have is the customers they have, because any business, I think if they have the customers, they are probably financial business, they are probably ready to start the business faster. On a B2B side, they have got the distinct advantage of having the Kirana merchant as their customers, who comes with a proposition of, I think, having credit total addressable market of around 50 lakh crores. And on the retail side, they have the customers coming from Reliance Retail's 18,000 stores, as well as their digital platform. So that gives them a power to fund the lending to the retail, particularly the subvention pricing. So that is where probably I think the NBFC vertical could possibly get the highest amount of traction, the momentum, and so it would be converted into valuation. The other 3 verticals definitely have an advantage as well, because distribution of financial products, you have Moneycontrol, where you have got the highest number of users, the registered users. And that is where probably I think you hold the advantage of cross-selling and upselling of different products. Sure. To a greater extent, I think this is where they're starting from. Insurance vertical, I believe that I think they would be having the disruptive ability to come up with the micro insurances, where they would probably penetrate faster with every transaction. And that's where, again, I think their digital platform will help them. And the AMC vertical, where the ETF is going to be the order of the day, where again I think largely the focus would be on cornering the larger amount of subscription for the end users in a micro coupon order. So all in all put together, this company starts with a good proposition. Of course, revenue, profits, etc. will follow, but I think this is a business model as I see it, which is likely to work well.
Mr. Choksey,
The
more, sorry to interrupt you, just a minute more on, actually a minute more for your other two bets, because we are going to be winding up with the Tata Motors, the other two bets that you have, so that we can also move on to and ask you more questions relating to your apparent bets that you've picked up.
Sure. I think Tata Motors is a fairly known story. However, the advantage out here is the commercial vehicle
It's just
segment,
going off
passenger
again and again.
vehicle segment, and electric vehicle segment, and the JLR portfolio. Each of these areas of activities are basically now gaining traction, having worked on the cost reduction measures. Each of these areas have their own growth stories to talk about. Commercial vehicle is largely driven by the industrial expansion, the infrastructure expansion, and at the same time, I think the higher amount of expansion coming in because of the scrappage policy coming into force. So this is where we believe that the Tata Motors is offering a visibility of next 3 to 5 years from the point of view of business. And today is an opportunity to buy into these stocks with a clean balance sheet. Praveg is a third company, which is again, I think, a very interesting proposition. Uh, BSE listed, of course, at this point of time, sub 1500 crore market cap. But the opportunity out here is that a leisure travel, spiritual tourism is something which this company is basically factoring into. They have got tent city as their business model. They have got exhibition centers as their business model, in which likes of Statue of Unity, Run of Kutch, and now at Daman, Diu, and so many other places, they are basically starting with the tent cities. So these 12 locations which they are likely to start with in the current year is going to get expanded to 25 locations in the next year with the kind of program they are having, including at Varanasi, including at Ayodhya Ram Mandir. So in my viewpoint, I think this is one company which gives you a distinct advantage because it's a fresh business. For every room, spend 10 lakhs as against five-star hotel charging, spend about 1 crore. Whereas I think the average room rate is probably higher than a five-star hotel because they give experience. I feel that this is one company which can be considered by investors from the point of view of investment. And I think at corrected price, maybe I think this could become an opportunity for investment in the portfolio.
Sure, Mr. Choksey, just a small follow-up question there for Tata Motors. The company has delivered in a poor sales growth of around 3.48% over the past 5 years or so. The return on equity also isn't really encouraging for the last 3 years. Do you think deleveraging guidance is now well priced into the stock rally? Because the delivery hasn't really been very encouraging for Tata Motors. It's been rather tepid. What do you make out of it?
Yes, I think that is what I said that I think having corrected the past, I think they are now ready to grow. I think in a business, when you are looking at investment, I think you have to look at the future prospects which the company brings in. In this case, I think the future prospects, I think, remains extremely strong, but their past balance sheets were not allowing them to implement those prospects, which is now a situation where they are probably getting into the implementation mode. The balance sheet has been cleared as far as I think the cost reduction aspects are concerned, rationalization is concerned. And at the same time, I think now the demand scenario is opening up for passenger vehicle, commercial vehicle, electric vehicles, and most importantly, the COVID-related effect on the Jaguar portfolio, JLR portfolio, is now also overcome. So all in all, put together, I think the company is showing reasonably good growth prospects for growing, irrespective of the past, where I think they could not grow or they could have tepid growth.
All right, Mr. Choksey, we're just gonna leave it at that and gonna now navigate our discussion to the second guest that we have on the show, Siddarth Bhamre, EVP, heads also research for Religare Broking. Well, your top three picks there, and of course, a small request if you could, make it a little more crisper so that our audience could capture it all.
Sure. Firstly, thanks, Nickey, for having me on your show.
Pleasure.
And we wish, from Religare Broking, happy Dhanteras and happy Diwali to you, your team, and all the viewers. So we are playing with safes, and hence we have all three large cap names. And TCS is the first name which I would like to talk. Now, one thing before I talk about TCS, the overall industry, Nickey, has been like 2 3 years we are listening that US will go in recession and IT will have a problem, and that's the reason IT stocks have underperformed in last 1.5 year or so. But last couple of quarters, despite negative news, we are not seeing heavy corrections in these names. You need to understand that either you will have a valuation support or you will have cushion of high growth. Both cannot exist together. And right now, IT has valuation support and growth will follow because there's a lot of transformation which is happening because of digital space and of cloud technology. And we believe that orders is not an issue. There is some execution delay. And TCS, why TCS? Because TCS is least volatile in terms of predicting their earnings, or be it on the margin fronts or be it on the growth front. And at this point of time, TCS is available at around 21 times valuation 1 year forward. And very rarely we see a brand like TCS available around 20. Good valuation support, order book is strong, and barring coming 1-2 quarters, we believe that again the trajectory of growth would be higher. Plus, attrition ratios have come down from 21-22% to sub 15%, which was the problem in IT space. So I believe all factors, barring this overhang of macroeconomy, we believe TCS is a good addition to a long-term portfolio at this level. The second stock I want to talk about is Maruti. We also had this stock in our previous Samvat, and we continue to maintain it. Maruti firstly has stopped, reducing its market share. It came down from 52 to 43%. One thing I want to say more about industry. Earlier, Nickey, it used to be that if you're launching more product, then there will be room for higher growth. I think for some time to come, the situation has changed. It is not just about launching new product, but it is also about the ignition system, the fuel type transformation, which companies are doing, like EV or from petrol, diesel to CNG. So Maruti no more has diesel cars. A lot of people are talking about the EV, but we are quite optimistic of Maruti meeting its numbers through sale of CNG vehicles. So all its models are now coming, at least the entry level to mid level are coming in CNG segment, and Indian audience is very welcoming towards CNG. So I believe falling metal prices, falling commodity prices, growth rate to be strong. Maruti is a decent buy. TCS also we have around 20 to 23% upside. Maruti also from current levels we are expecting 23% upside. Again, valuation wise, there's a valuation comfort to Maruti. It's available at 22 times, and we are expecting around 27 times multiple we are giving, which brings our target to somewhere around 12,700. The last stock, Axis Bank, you can't be bullish on markets if you don't talk about financials. Why Axis Bank? Why not HDFC or ICICI? Because Axis Bank is outperforming. We are seeing a decent growth. In fact, the growth is higher than industry, other peers. Also, the acquisition of Citibank customers is adding good cushion to the margins. Where other banks we have seen declines in NIMs, we have seen Axis Bank holding to its NIMs of around 4.1%. The CASA of customers acquired from Citibank is around 70-75% or so, or more than that. So I believe growth trajectory, wealth management business, credit card business are doing pretty well for Axis, and that remains a preferred pick in banking space. We don't have very aggressive target, but 14% upside from current levels. So these are three names: TCS, Maruti, Axis Bank.
But pretty much it. But I have two follow-ups for you. Typically for TCS, where you made a good point where you spoke about the valuation, perhaps, and you also spoke about the growth profile. Both cannot be matched together. But a bit of concern for TCS is that despite bagging incremental large deals signed by the company, the double-digit growth really isn't likely to come anytime soon for FY25 also, according to most of the brokerages. You think the company will need a combination of cost takeouts and digital transformation deals? How soon you think this could be achievable? If not for this year, then FY25, do you expect the growth to come in by FY25 in that case?
See, I don't think so anyone has answer to that, and we all have wild guesses. What is working in companies' favor, Nickey, is, or as far as I would say for the entire industry, is that 1.5 year back, there was a lot of margin pressure because the cost of employees was going up, and that's the key cost. And that is reducing. So despite top line not growing very significantly, we haven't seen any significant pressure on margins. And I accept, and that's the reason, valuations are available at these levels, that for next probably 2-3 quarters, there may not be a significant growth. But one needs to understand that this growth is not because there are no orders. People are, clients are delaying because of uncertainty in macro environment. And we will not get into it that why there is uncertainty. We all know that. And that's the reason valuations are cheap. So I agree to it that growth will not be very significant in coming 2-3 quarters. And that's the reason stock is available cheap. So we would suggest buy, because as 1 or 2 quarters go by, market would start looking beyond these concerns and again would start giving higher multiples to TCS.
Siddharth, point well taken. We are now going to graduate our discussion. Both Deven and Siddarth, please stay on with us. We are again going to come back with two more questions for both of you. But Shrikant Chouhan, who heads the equity research for Kotak Security, also joins us. Of course, he's been there. Talk about the 3 Diwali picks that you have for us and the rationale behind the same.
Yeah. Very first, thank you very much for having me on the show, and happy Dhanteras to you and to all the viewers. My first pick is from the BFSI space, on which we are specifically bullish with a medium to long-term view. And the pick is Canara Bank. Canara Bank has reported a very strong earning growth of approximately 43% year on year. Also, if we go through with its net interest income, then there also the growth is almost around 20%, which is healthy. The bank's asset quality has continued to improve, and if we go through with the loan growth, then that is also like somewhere close to 12% year on year and 4% on Q1Q basis. So despite all this strong performance and consistent upward activity in the stock, as well as the improvement in the fundamentals, if we go through with its overall valuation, then it is still trading at discount to its PSU banks and peers. So it is available at 0.7, 0.8 times to the book value. So based on all these reasons, we feel that Canara Bank should do well, and we have a target of close to 425. Currently, it is at 385 levels, but in case if there is any correction, then we should look for adding it, because we are expecting stock to do well in next at least 6 to 12 months of time. The other stock on which we are bullish is Philips Carbon, and the company is a leading player in the carbon black industry within the country. They are also like a good position to take advantage of any opportunities that arise. And recently, we saw a quick correction and drop in the crude prices, which will help to tire industry, and indirectly it will help to the company. So broadly, we are bullish on the company, and we are of the view that it has also low leverage, low cyclicality, and its return ratios are consistently improving. Also, its specialty segment is really doing well, and it has very high margins. So that will actually help the company in the long run to adjust with the cyclicality business of the company. Currently, it is trading at 17 times to its FY25 EPS. But if we consider the EPS of FY25, then it is close to 11.7 times, which is reasonable. And based on that, we are expecting stock to trade somewhere close to 260 in next 12 months of time. So fair value is around 260. So we like Philips Carbon as well as Canara Bank. And the last one is from the FMCG space. And again, the reason is same, that the crude prices are now stabilizing somewhere close to $80 per barrel, which will help achieve, I think, going to help all these FMCG companies. But in that specifically, we like Godrej Consumer Products. As we all know that it is into personal care and home care products. But apart from that, the overall, if we see the overall its business, then the company is getting its business on not only from the domestic side, but also from the overseas, like Indonesia and African markets, and which has actually helped the company when the volumes are dropping. And if we see other competitors, then there we saw a good amount of drop in the volume. But this particular company has managed to, here also we saw the drop in the volume, but still it is much better than the competitors. Also, if we go through with its current fundamentals, then it is 20% discount to its peers. So broadly, we are of the view that Godrej Consumer is also going to do well in next 12 months of time. The risk-reward ratio is quite favorable, and we are expecting stock to move towards 1130, 1140 in next 12 months of time.
All right, Shrikant, one follow-up question that I have for you. Canara Bank is a good bet. Apparently, PSU banks have been the flavor of the season, but I'd want to focus more on Philips Carbon. There is A few of concerns there. You think slowdown in automobile sector, put together a sharper rise in crude oil prices given the kind of geopolitical concerns that we're sitting in with, could result in higher working capital requirements for the company?
Yeah, that is what I said. Na? Ki right now, like the crude was somewhere close to $95-$100 per barrel, but now it is quoting at $80 per barrel. And again, if we go through with its overall entire business, then company is moving from its cyclicality business to specialty segment, where the business is very high. So wherever there is a black, the company is into that. Okay, so the business is definitely going to be more and more interesting in next 12 months of time, and in fact in next at least 12 to next 1 to 3 years of time. So they are reducing their exposure from the cyclicality, the way Reliance has reduced its exposure from cyclicality to retail and to telecom. Similarly, the company is also trying to the same, and based on that, we are bullish on the stock.
All right, Shrikant, those were your 3 bets out there. But to all the 3 gentlemen out there, I would want to ask this somewhat your top advice to our viewers on what not to do this Diwali. And of course, we're also going to be getting into a special conversation with Rahul Arora from Nirmal Bang, who's going to talk about the entire Samvat put together. But first, we're going to start off. Rahul, your word before we get on to a detailed conversation with you as to what do you make out of the entire Samvat. We're going to hold on to that thought, but first go to Deven Choksey. Sir, how are you going to view your first typical advice to the investors out there, what you ought not to do in this Diwali? Mr. Choksey?
Advise him. But I think from the experience that I have, and I would like to put it across and share with them. See, basically, you are operating the derivative market with about 95 to 96% of the volume traded, with 5 to 6%, I think, traded in the cash market. My advice to investor would be that I think now you have got another 10, 12 years in which I think you are likely to see India's market capitalization going up by 3.5 to 4 times from now on. By 2035, we are expecting the market cap to be somewhere around $12 trillion. If this particular situation is there, then I think it makes sense for anybody to take the fullest advantage of this situation by staying invested into the businesses which they select. The consumer-oriented businesses are maximum preferred because they have been creating best wealth, I think, for investors. In my viewpoint, I think they should possibly focus on this aspect. Currently, I think we are seeing a typical habit of trading in the market through derivatives. Derivatives are good for short term, yeah, but I guess I think for the long term investment wealth creation, where we are talking about, I think one should stay invested and I think give the power of compounding to your portfolio so that you can create, I think, a good amount of wealth over the next 10, 12 years.
All right, Mr. Choksey, we're going to leave it at that, and thank you for taking out the time. But I'm going to go to Siddarth and check with him what's his advice on what not to do this Diwali.
Nickey, so I would suggest don't depend on anyone else or so-called expert to make money or wealth for you. People like us come and talk and we give our advice. You need to listen to us. You need to understand it thoroughly. Go back, do your homework, and then buy it. Means I see that people, if you want to buy a phone, you see so many variations. You see so much of different type of phones, and then you make a decision. And I think same sort of exercise should be done for selecting stocks, whether it's derivatives, whether it's equity, commodity, or currency. I think everywhere you can make money and everywhere you can lose money. It is just that how disciplined you are. And I think you should now start taking responsibility of your actions rather than blaming any expert or brokers, because we all are learned and we are all now privy to all the information which is available. So take your destiny in your hand, not in hands of broker or experts.
All right, Shrikant, your advice for what not to do this Diwali?
Yeah, I would say that money management is extremely important, and if you are like not able to understand the market or maybe to invest in which company to invest and all, then definitely you can depend on the research of experts. But at the same time, money management is something where you cannot park all your funds in any one stock or in any one sector. One thing. Second thing is that the way the formation of the market and the way there are like the flows are there from the government. I think these markets are definitely going to give a good amount of returns to the investors in next 2 to 3 years of time. So the strategy should be to buy on every dip instead of panicking if there is any correction in the market. And the last but not least is that try to buy good companies, the solid companies where the pedigree is really strong. So if you follow these few, I think, strategies or maybe rules, I think you can make very good money in this market.
All right, gentlemen, we're just going to leave it at that and wishing you all a happy Diwali and Dhanteras again. But I'm going to quickly.
Thank you.
Thank you all.
I'm also going to navigate now our conversation to Rahul Arora, who is the CEO of Nirmal Bang, and of course ask him about how Samvat 2079 has been for him. What does he expect in 2080? And of course, broader themes and the stock picks that he has for our viewers. Let's start off with the basics. Samvat 2079 typically was completely a year of unexpected. We saw most of the performers, or let's just say large cap companies, the industry leaders, seeing a bit of underperformance, and of course mid cap and the small cap index pretty much outperformed the markets. Do you expect the trend to continue? And if yes, what are the themes that are typically that one need to watch out for in the Samvat?
Well, Nickey, I think when we started off last Diwali, I don't think anyone would have expected the next 1 year to be as crazy as it was. I mean, you've obviously had the Ukraine-Russia war enter into a second year. You've had a crisis in the Middle East. You've had an entire year where interest rates have continued to rise in India as well as in other parts of the world, including the United States. And the US has not gone into a recession. I think that's one call everyone in the world has got wrong. I think everyone thought that the US would go into a recession at some point this year, but look at the resilience of the US economy. So I think too much has happened, and I think in the court 19.5, 20,000 on the Nifty, I think it's a very good place to be. That being said, as we look ahead to the next 1 year, I would say be cautious. Don't be over exuberant. Two of the largest democracies in the world go to elections next year, with us in May, situation where you're going to have a little bit of fiscal slippages on both sides, where the government is going to look at increasing spending either through infrastructure or for the masses. But I think all said and done, Nickey, if we are sitting at similar levels around next Diwali, I'd be reasonably happy. And that's not to say that it's not going to be a volatile year. I think we are going to see 10-15% corrections. You are going to see 10-15% kind of rallies. But net, if we are sitting somewhere around 22,000 next Diwali, I think we would have had a pretty good year. Also, Nickey, don't forget, this has also been a year where you've actually competed for asset classes. Fixed deposits became a very interesting source of investments. Gold has had a respectable year. Real estate has done pretty well. So not just looking at large cap, mid cap, small cap, I think you're actually looking at asset classes competing with each other. But I think the one thing I'm sanguine about is if India is going to compete with one market for flows, it'll be the United States. So I think we're still going to be the biggest beneficiary of flows into emerging markets. And I think a lot of it find its way into large cap stocks.
Sure. Rahul, I'd want to ask, which of the themes do you think have been apparently overplayed in the market? Do you think it's broking perhaps, or defense, or for that matter, banks? Which themes do you think are a little overplayed at this point of time? And what could be the next hot theme coming in for Samvat 2080?
So I think you've kind of hit the nail on the head, Nickey. I think there are so few niche sectors that unfortunately when one gets discovered, sort of everyone rides the bandwagon. And we saw that with chemicals and specialty chemicals, at the peak of COVID and the kind of returns those sectors gave. As you rightly pointed out, I think defense is something that people have latched on to. I'm not sure if valuations make a very compelling case from a 1 year perspective, but of course, if the current establishment was to win the next election as well, they've made their stance pretty clear on what they believe in terms of Make in India and how they see the defense sector evolving. So I think if you have a 5-year view, it's still a sector that you can potentially bet on. I think most PSUs have had a remarkable run over the last 1 year. So like I said, I think if you broaden your horizon to 5 years, then it makes sense. Immediately from a 1 to 2 year perspective, I'm not entirely sure. I think banks are priced to perfection, and I think you make a very interesting point, because I think even in the quarter gone by, you have seen on a case-to-case basis, there is still some pressure on net interest margins on a case-to-case basis, still some pressure on asset quality here and there. By and large, the sector is in good fettle, but can the bank Nifty head to 50, 55,000? over the next 1 year, I have my reservation. So I think that the trade.
All right, we'll try and connect with him again. It looks like we are also going to be chatting about top 3 recommendation that needs to be on your watch list from Rahul. So we're going to be trying to patch that line back, but so far it's been good show that we're looking at 9 to 10 actionable ideas from the space. Rahul, just a last follow-up question that I have for you perhaps, and most of the viewers would want to know I know you don't talk much about stocks, but since it is a different occasion and a special occasion out there, 3 top picks that you think coming in from Nirmal Bang, and also the rationale behind the same.
Sure. I think let's make it a mixture of large caps and mid caps. I think from the large cap space, I would look at, say, something like a Britannia and a Polycab. And I think from the mid cap space, we could look at something like a United Breweries and a Triveni Turbines. I think if you look at Britannia, it's been such a remarkable story, right? The distribution has doubled. The margins have expanded. I think commodity prices for them have by and large peaked out. Most of their capex is either on stream or going to be coming on stream in the next year or so. So I think this is probably a company that will compound its earnings and its top line at somewhere between 12 to 15%. Maybe, the operating, the EBITDA and PAT level, it might be a little higher. But for a company at 45-50% return ratios, 100% plus return on invested capital coming to you at 40 times, I think that looks like a reasonable investment. Polycab, I think it's been one of the biggest star performers in terms of beating earnings expectations over the last 3-4 quarters running. I do understand the stock's done really well, but I think if you hold this name, it could give you about 15-20% returns, as is the case for Britannia. I think in the case of Polycab, Nickey, the kind of investments that's going into power, right? I think you're talking about power generation going to 900 gigawatts, of which almost half of that is going to be renewable. And then, of course, you have about $3 to $4 trillion worth of investments going into the power sector. It's only going to help wires and cables. And Polycab having double its distribution as well is going to be a market leader there. I was reading some real estate reports. Real estate is expected to grow at a CAGR of 15%. So all these things considered, I think Polycab, for the market share that it has, again, almost a 50% return on invested capital company, should look like a good one. United Breweries, it's wedding season. The World Cup is on. We head into summers after that. I'm sure a lot of people are going to be drinking beer through this period. Winters is a very good time also, actually, for consumption of beer. I think the margins, which were about 8% in FY23, we're expecting that to go to about 18% in FY26, which basically means you're looking at about a 40-45% earnings compounded, which is remarkable. We value this company on an EV to EBITDA. I think it's coming to at about 26-27 times. We can value this company at about 30 times, and you probably get, a 25% kind of return on this name. Again, all the route to market issues are sorted out. And there's a very good chance, Nickey, over the next 3 years that the profits of this company actually double. I think from about 800 crores to about 1600 odd crores. And maybe one last name, if I throw in there, would be Triveni Turbines from the capital goods sector. Again, a sector that's done really well over the last few years. Very strong return ratios, return on equity and capital employed at 35% plus. Coming to you at about 30-32 times, not the cheapest, but for a 30-35% kind of revenue and profit growth, and the kind of growth that you're seeing in both the exports side of the business for them, as well as the aftermarket, which grew at about 70% in the quarter gone by, I think valuations are fairly reasonable. So I think these would be some of my 3-4 top ideas if I was buying into this Diwali and going into next. Something like a Polycab and a Britannia in the large cap space, and United Breweries and Triveni Turbines from the mid and small cap space.
That's pretty much sums it all. Interesting bet coming in. I mean, shares of FMCG firm Britannia, there's been have surged on almost 20%, logging in the maximum gains. Interestingly, it was the 52-week low that the stock scaled November 4, 2022, and within 9 months, we saw Britannia actually scaling in an all-time high of around July 6 for that matter. Some more steam perhaps left in for this one. But we're just going to leave it at that, Rahul. And thank you for taking out the time and speaking to us.
Pleasure, Nickey. Thank you so much for having me.
All right. With this, it's a wrap. And goodbye from the entire team who puts this piece together. Thank you so much for watching. And of course, happy Dhanteras and Diwali to the family. I hope to the viewers, family, there's a joy, abundant success in your investment. May the coming year, Samvat 2080, bring wealth and good fortune to you and your loved ones. Happy Dhanteras.
we have the best Diwali party in town. Stocks, songs, patakas with some of the most admired investors on the Lal Street.
Diwali is not just about lights, it's also about illuminating your financial future. So join me in our exclusive Diwali stock market extravaganza.
We'll dissect the market trends, unwrap hidden opportunities, and light up your portfolio with expert insights.
In the spirit of Diwali, come discover some hidden gems that can light up your investment journey.
From Diwali picks to strategic play, we've got you all covered. Don't miss out on the financial fireworks.
You don't want to miss it. See you on November 10th, 4:30 p.m.